Aloha, traders and investors. Welcome to another video looking at paper trades. This one is going to be focused on managing trades that are already established and looking at what happened with yesterday's order to do a strangle on GLD. Me personally, I like to have my live account, my simulated trading account on Thinkorswim set up under application settings, under startup, and then selected below. You could do home screen, last use, selected below. I like to have this flexible grid. You can put it on whatever you want. Play with different things, see what do you like. Generally, anything for the futures. On my live account, I keep the futures on, so when I open it up, the first thing I do is quickly scan over what's going on with the futures. I'll get that set up over here with time. So let's move over here to under the monitor tab, just in case I didn't make this clear, we're under charts. We're under the charts tab, and we have three different options here: product depth, flexible grid, charts. Right? I'm using these charts under the flexible grid for that. Let's click over here to monitor. Now we're under the monitor tab. Everything is closed up besides this part. That part's open, and I have things categorized right now: futures, option trades, short stock, long stock, open orders. Really quickly, let's see. Hey, where'd that open order go? All right, it's not there, and I can tell you, since it's not there, it did not get filled. So that's how I like to do this. If I would have put that a good till cancel, it would still be sitting there. Jump up here. Look at that. No open futures trades. Option trades, have some of those. Short stock, have some of that. Long stock. I can pop this open now. So technically, I actually do not have a long stock position, right? Here is H&R, H&R block, quantity 0. But I have a short put at the 37 strike price, which right now it is it's in the money, meaning that it would appear that if it stays in the money, that I'm going to be purchasing 100 shares of H&R block at 37, and that is totally okay with me because I'm fine with owning 100 shares of H&R block at 37. So I put it under here in the long stock column. I'm okay if it expires worthless. I'm okay if I get assigned. And right now I'm looking to potentially get assigned. So that's what's going on with the management of that. Later, after we go through and kind of quickly look at these other trades, we'll come back and replace a trade on GLD. Short stock. Okay, we're short. What am I short? One share of the S&P 500. Trade price. This is the price that I opened this trade at. $368. What is the S&P 500 at today? Mark is at 377. So that means my position is negative a little bit. I've got a good till cancel order here that I'm willing to close out. Want to buy back this position if the S&P 500 goes 360 or below. I'll close it out for that, and I'm just going to let it linger there. Already look, no futures trades. Here's a variety of stocks that we have that I have open for general options trades. Look at this, profit and loss since open. Look at this, is at 0. And this one's at 0. Let's take a look at that. Boom. Investigate. Oh, look at this. Trade price 0. Delta, theta 0, 0. Now, what you might not know is that I don't know when it was. Might have been, I can't remember exactly when, but I put a good till cancel close order on Apple, and I closed this off at a profit. So I made about a little bit over $1,000 on that trade. If you want to see when I originally opened these trades, it's in two parts. So right here at the 5-minute mark, it's just popped up right there. I'm going to link to part 2, and part 2 links to part 1. I know normally, you do part 1 first, then you go to part 2, but it's just the way that it is for the moment. So, or for eternity. So go ahead and check those out. It's basically using the VIX to sell out of the money options on. So watch that. Watch those videos if you want to learn what strategy I'm practicing here. Now Amazon, so same thing, out of the money. We got a leap, expiration date January 17th, 2005. It's at 190. Currently, Amazon is at 82 and some change. We can see it's profitable by 173 bucks. Let's pull up a calculator. Do some quick math. You're probably super good at mental math, but I'm not. And so one thing that should tell you, in case you're not, is that you don't have to be, it helps to be a math genius to do well in the market, but you don't have to be a math genius. So what I'm going to look at doing is I took in a credit of $3.65 times 100. So I took in $3.65. Half of that would be, let's say, 121. We're close to 121 right here. So I'm going to set up this create closing order. And I'm going to just go 120. Change this to good till cancel. It's under option trades right here, right? You can select where you want it to go. I want it under option trades. That's where it belongs. It's basically telling me this information. You can pause the video and read through that if you want. But now, okay, now we've got I sold to open, right? -1, sold to open. Now I'm going to buy to close. -1 plus 1 evens it out. Let's do that on Microsoft also. So Microsoft, same thing, January 17th, 2025, $340 call. Right now Microsoft is at $234. Brought in $1,850 when I originally did that. I get it. There's some commissions minus that or whatever. We're just keeping the math super simple here. So we'll put in a $9.25 closing order. So create. I get here by right clicking on this. Create that closing order. $9.25. I'm going to change this to good till cancel. All right, under the right spot. Perfect. Okay, so Netflix, let's do the same thing for that. Same thing, January 17th, 2025, $550 strike price call. I sold one and brought in about 2,600 bucks. $2,625 divided by 2, 1312. So we'll create this closing order at 1312. Make that good till cancel. So this one, since it's considerably far away, if it's at 1312, it's over here at 23. So it's like $10. Needs to fall down $10. So I'll be watching that just a little bit more. But I think it's going to be safe. I'll be paying attention to that anyways. Do the same thing here for Nvidia. Right? Brought in a little less than 800 bucks. So 795 divided by 2. We'll go with 397. Create this closing order. What was it? What was that? 397. Let's just do we'll do 390. Great, that's done. SoFi, that one closed out. I will never do this strategy on SoFi again. I made a whopping $2. Really wasn't worth the time. SPX. Now this one is it's a little more complicated to close out because this is actually a spread versus a one leg. There's two legs of this. 1, 2. Where these? Look at that. One leg. Some people call these verticals, spreads, whatever. And right now it's up. This position is up by a little over 2,500. Ooh, I'm gonna hold down the control button, click that. Okay, now I got them both closed or both selected, and it's telling me this vertical. So where is it at? I thought I just ooh, there it is. But now look, now here's something I would like to show you. All right, right now, I guess right here it is showing me my position. Perfect. Is it showing me? It is showing me the trade price. So I brought this in and brought this much in, but I bought this. So the difference between those two, 186.60 minus 123.20, and I forgot how much, if this is multiplied by 100 or if it's more. 63 and divided by 2. So let's go with, we'll bring this down to, 31. Make that good till cancel. And see what happens from there. I'm somewhat tempted to just close this out at right around here. But one thing that I forgot to do, and I think there's a way for it to check this, but to see how much money I actually brought in. So on these other ones, I was just trying to close it out for half. So we'll just go with that for now and see what happens in there. All right, so those have somewhat a bit of management on them. That's closed out. That's closed out. We're looking to close those out at the moment because the market, everything's kind of going down. Let's take a quick look at the VIX. So the VIX is moving up just a little bit today, right? Kind of wavering between this 21 and low 22. Moving up. If the VIX starts falling back towards 20, I'll reopen some of those trades. But because if the VIX is falling down, generally the stock market is moving up. Generally speaking, that is how it goes. And you can do this if you like. Now what I'm going to do, if you notice here, compare it with the S&P 500. And I think I have to there we go, enable this left side. So now we have the VIX in candle and SPX in on a line chart. And you see, generally speaking, when the VIX is going down, market's going up. When the VIX is going up, the market's going down. Why is that? Because in very layman's terms, the VIX is a fear meter. So when people are getting scared in the stock market, it tends to rise up. There's more to it. You can research it if you want to learn more about it. But really, really basically, the strategy that I was just playing with these long-term options here, the basic strategy of it is, depending on where the VIX is, we're selling options kind of on the opposite side. So when the VIX is real high up here, you're selling put options. When the VIX is lower, you're selling call options. So when I originally sold those options, it was around November 23rd, somewhere in there. So the VIX was down around 20s, when I believe, right in there. So if the VIX pulls down a little bit, otherwise I'll just manage those positions. And if you feel like it, you can keep that line comparison chart on, take it off, whatever you want to do. I think I just lost my did I lose anything? I don't think so. Yeah, maybe that just kind of messed something up. Anyways, so we looked at the VIX. That's what we're doing with that. And let's go back with, got those done. All right, so last night I made a video putting a strangle on GLD. So let's take a look at that. Right now, my watch list is connected. Watch this. My watch list is connected. Watch this. Huh? Okay. Once I click GLD, see that it changes, and so should be right here. Okay, GLD. Close this off. Let's take a quick look through here. 5-day, 1-hour chart. We see that GLD basically kind of has been dropped just a little bit. The highest in the last 5 days it traded to was 176, but that's kind of an anomaly. Seems like it's got some resistance right here around the 169.50 area. Lowest is 166, and it seems to kind of be this, seems like a little more resistance here, or support here at 167. But I would say this area from about 167 to about 166. So next one, take a look at this. Let's throw this volume. Put that average volume back on. Let's put that on really quickly. I think somehow that was lost when I switched that comparison. And I know there was a 200-day moving and a 50-day moving average on there, but we'll just leave those off. So what are we seeing here? 6 months, right? 1 day per candle. What I'm seeing is this high at about 170, and I'm seeing a low around 150-ish, right? To just quickly eyeball it. Look at 3 years, 1 week per candle. Looks like got close to 190, 194, 195 twice. Lowest is about 136, but look at that. Not a lot of time around that 136. Not a lot of candles there. Most of the candles, it's more about this 145, right? And then it looks like that 180, 180-ish. I could kind of see that. Let's take a look at even more. 10 years of information, each candle being 1 month. The low is being 100, highs being that kind of most recent high that we looked at on the other that other chart, whatever one that was. So a little bit less than 195. And if you look at a cone of probability, you know what? I'm gonna kind of skip doing that at the moment. Where's our moving averages? So these aren't all the moving averages. To me, these are all the moving averages because these are the ones that I look at. And then if you notice, I'm looking at a lot of this without moving averages. You can kind of blur things up. But I like to at some time know where the price action is in relationship to all these different moving averages. So what what am I basically seeing here? I'm seeing right now that overall price action is above all moving averages, although it's not strongly above all of them, right? It even tested this 9-day moving average today, but it's still closed above it, and it's kind of been above it. So what we'll do, we'll go over to, we'll try to get that same trade going again. We'll look same one I put on yesterday. We'll look at the 135 and then drop down to, let's go with where's there a lot of contracts? So three traded hands today on that 300. One traded hands a day. We'll go with the 300. We could get some better premium lower. However, further away, maybe that'll allow this trade to close out a little faster. So I'm going to press Control and then boom, hit that. So now it brought up this second one for me. And maybe we didn't get filled because I put this order in for $6.80. Right now it's looks like the mid is at 624, and let's just go with that to see what happens. But this time we'll do it good till cancel. And then right here under account, I'm going to switch this to open orders. Send it off. I personally like this stuff closed up a little more than that, but if I can remember to. So looking under open orders, there we go. We see it right there, showing us what's going on. And overall for my paper trading, that's what I really want to test this Strangle on that. One thing, I guess one more thing that we could do really quickly. Let's see. Maybe we can do it this way. All right. So I close those off. We just have this Strangle on here. You can kind of shrink things in. I'm definitely not the greatest at these risk graphs right now. That's why I'm trying to use them more to become better at them. But right now, our current price is at 168.14, which should be right there. Once that's showing 161, that is actually showing us something a little bit different, isn't it? Okay, I got it. This line right there is the 184. This is really why paper trading is so important, because you can learn all the things that you don't know. You can be like, whoa, I didn't know that. I'm confused on this. You can in a safe environment, you can figure all those things out before you start risking your money. Now, when it comes to things like selling cash secured put options on stocks that I don't mind owning, I know how to do a halfway decent fundamental analysis on companies. I totally understand how to sell cash secured put options on them. I know how to manage those. I know how much money I have in my account. I can do that really well. I've been doing that for years. So and that, I just do it in my account, in my live account. This one, I haven't done this before. I can practice a little bit, and then when I'm ready, I can potentially, if through practice it starts fitting my parameters. Right, we got the margin requirements over here. That's something you want to pay attention to. You don't want to get blinded by bringing in $600 and you only have whatever, just barely have enough margin required, because look at this. This is showing you if it moves 10% up and if it moves 10% down. If it moves 10% up, your margin requirement right now is at 23. But if it moves 10% up, you're looking at 25. So if you had 23 to open it up, but you don't have 25 in case it moves against you, then you will be getting quote unquote a margin call. Who knows exactly how it will play out, but you can tweak these different dynamics, and I think it's basically showing us one standard deviation or two standard deviations of where the stock should be moving. And we see it's like we're up here at 300, so it has a lot more room to move up to the upside, but we saw that like it has been pretty close to 235. So what my plan is if this gets filled, then what I would do is I would close out of this relatively soon. I'd like put one of these limit orders in to buy it back, close the position at whatever. I don't know. I'll see. I'll kind of play with it and figure it out as I go along. I don't want to make this video any longer, otherwise I'd start looking for futures trades to put on, but that's pretty much it. I'll look for other futures trades, and if I find anything good, then I'll make a different video on that. You guys have a fantastic day. Aloha.